Hi everyone and welcome to Property Insight. My name is Neil Harding.
I'm Mark Ashworth.
Today we're going to be talking about the housing market and delivering a housing market update. We're going to talk about house prices and what it's like for myself and Mark right now in this market, it's November 23, to actually hunt down a deal and find a good property investment that appeals to us, that meets our investment criteria, and what it's like with boots on the ground trying to actually find a deal. So Mark, why don't you kick us off and share what it's like for you to find a deal in your investment area?
Okay, so I invest typically in a fairly small market town. So let's say, I don't know, between 25 and 30,000 people. Quite different to your area because it's quite a bit smaller, not sort of non-city status, obviously, and a smaller area. And the problem that I'm finding is there's probably, I'd say there's a distinct lack of availability. So people are probably sitting still on their stuff, and people that are selling are probably selling because they have to. So properties that are coming available are people who have got tenants in situ, so landlords just wanting to offload. Properties that might need refurbishment are typically those where their elderly people are going into care homes or passing away, and so therefore they're just naturally it would be to sell those properties. And finding that the local agents are describing that the bottom end of the market is still reasonably strong, particularly for those who are moving from, let's say, who may be renting, who can now afford those repayments on the mortgages, because typically those mortgage repayments are not dissimilar to their rental amount. I guess suppose it depends on affordability. And so therefore the stuff that they're finding more difficult to move on is the more expensive stuff. So, you know, your sort of 4 to 5 bed, maybe semi-detached or detached properties. So the sort of more second homes that are struggling to sell. Obviously, which from a rental perspective, is not really what I'm looking for. So yeah, in general, it's pretty slow. We've got a few figures that we've naturally you want to talk about, particularly where it might be that the house prices appear to have gone up slightly in the last month. Apparently there's some data on that. But I mean, essentially, if we factor in inflation and we factor in many other aspects of the property market, and certainly sentiment is a big one of those, like what is all the media talking about, the mainstream media, that tends to have a massive effect on what people think's actually happening. I think it's just generally a bit flat. Again, just quite difficult to find properties, certainly that need adding value to. And the other big factor from an investment perspective is that once you've bought that property, you've then got to find the cash to refurbish it. And the cost of refurbishing and renovating a property has gone up a hell of a lot. I'm finding that now to get tradespeople to do jobs and work on any kind of property in any capacity has gone up quite a lot. And obviously cost of materials, you know, they've gone up as well. Yeah, I mean, kind of that's probably what I'm finding in my area. I've been looking been looking more recently at deals, and there's some out there, but they're not really that easy to get for the right price when you factor in the cost of the property, the fees of buying it, the cost of refurbishment, and then the end value. And obviously the end values are being a little bit squeezed now as well, and interest rates being where they are as well makes it a bit more tricky. So I think there are deals to be had. I think you've got some comments to make about maybe a deal that you've done recently that was a good opportunity.
Yes, I have. I mean, and just before I get on to that, I mean, I spoke to a friend and property investor last night actually, and I think they were having a similar sort of experience to what you were just describing, that the cost of the refurb is, you know, the cost of that has gone up. There are some deals out there, but actually if you're looking to do, say, a flip with a refurb or a buy, refurbish, refinance, that actually, you know, you might be able to make £10,000, £15,000, but is it really worth it? That's not necessarily enough for an investor to be interested. You know, and also a lot of it will rely on, you know, the valuation of the property after the refurb or the sale price that you can achieve, and you've got to factor in your time and effort involved as well to make the £10,000 or £15,000. You know, actually, this particular investor decided in the end that what they would rather do, rather than buy a property they were looking at buying cash, they decided to lend me money for a rate of return on a loan basis for a fixed rate of return, and they can make the same amount of money with no effort putting in whatsoever. So, which is an indirect way, I suppose, really, of investing in or via the property market. But it was just really interesting that was the conclusion they'd come to after about 6 months of trying to find a property to invest in. And I could totally see where they're coming from. In my own experience, I invest in Peterborough. My friend and property investor, they invest more around the sort of St Neots, sort of Stevenage sort of way. I invest in Peterborough. And to be honest, my experience is quite similar to that when it comes to estate agent sourced properties. I don't have a huge amount of estate agents ringing me up every day at the moment. There's not with an amazing investment opportunity. I think those that are selling that don't have to just aren't, and they're sitting tight and waiting till things pick up maybe, and maybe they can then achieve the price they want. But what I am finding is that in auctions at the moment, there are some deals coming through. I saw a bank repossession property going to auction this week, which I was interested in and I bid on, and next month actually a similar.
So we were having a chat off camera before about properties coming up in auction that have got problems essentially that need to be moved on, and finding that those type of properties tend to be now more put into auction than they are going through agents. I've in the past bought a couple of properties from a housing association, and now where they used to use a local agent, and now that housing association puts all of their stuff that they don't want anymore into local auctions, generally at a very low guide price. And if they're doer-uppers, they've always seemed to have gone for far more than, a combination of their value and the cost of the refurb, far more than what they'd be worth in the end. And maybe that's because just people are quite happy to buy relatively cheap properties and do them up in their own time, sort of thing.
Yeah. So we're going to share some data with you from various sources, BBC, Nationwide House Price Index, and various things. We'll run through some stats and to give you an idea of the data that's out there in just a moment. But I think what we're saying is, at the moment, our general feel is that at best, house prices are a bit stagnant, flat maybe. If they are increasing, and to me it doesn't really feel like they are, not in my areas anyway, it can't be by much. And if anything, it really feels like they're slowly going down, maybe 0.5% a month over the last 3 to 6 months. Kind of feels like roughly where it's at the moment.
Yeah, it certainly feels flat to me. And again, it depends a little bit on your area. It's going to be I think it would be very area specific and potentially property specific as well. So if you're looking to find those type of properties that represent pretty decent yields and that would attract the rental market, so anything from like a 1 bed to a 2 or 3 bed property, sub 200,000, they're the ones that you're gonna, because you're always going to be in slight competition with people like first time buyers, which of course they're not price conscious. They're more, this is a long term purchase and we want to get on the ladder. And of course, there's quite a lot of money slushing around out there in the economy, isn't there, as well, in equity and across people's bank accounts after, Boris's handout.
So looking at Nationwide House Price Index, I'm just going to read out some stats here, some figures. So house prices remain flat for the month according to Nationwide, but down 4.7% for the year across the UK. And if you add on inflation to that of 6.7% year on year, then that's a drop in real terms, clearly of circa 12%.
Yeah.
And actual fact, a drop of 12% is a crash. Convention is that a drop in prices in a market of greater than 10% would typically be described of and thought of as a crash. And in real terms, if these numbers were being reported in the media in real terms basis, it would be described as a crash.
It would be all you'd hear about.
And it's amazing really. And to that point, what's quite interesting is some little pockets of the media have actually started to pick up on that. So there was an article in the Financial Times just recently that with a headline of UK house prices dropped 13.4% from peak in real terms. And that's quite unusual to see. But then again, does every single person in the country read the Financial Times every week? I mean, you've got to go digging to see this sort of take on house prices.
Yeah. Or get out there yourself, make your own mind up about it. And also, You know, there's also a thing to be said about with property is a long-term play. You know, it's not for most people that are investing in property that we believe are watching these videos on our channel, is that people that want to build long-term wealth, they want to protect themselves, put money into good quality investments that over a period of time, typically I'd say 20 years at the minimum really, are going to give some kind of return. And property in that respect is very, very forgiving. You know, once you've bought something, it will carry on growing in value in line with inflation, and in most cases beating inflation.
There was an article in Finance Yahoo that I saw with a headline, "House prices rise unexpectedly in October as sellers bide time." So again, you know, quite difficult really, to be honest, for most people to actually figure out whether house prices are going up or down or staying flat or what they're doing. But nevertheless, that was, you know, worth sharing with you. In that article, it said prices in October were up by 0.9% compared to a 0.1% rise in September, according to the Nationwide House Price Index. Now, I haven't verified back through their comments back to that, but my earlier comments were from Nationwide, and that was saying that they're expecting house prices to be down by 4.7% at the end of the year. So it's quite tricky to unpick all of this sometimes.
Yeah.
And going back to my comment earlier and Mark, your comment earlier, actually for us, we feel as though house prices at the moment are at best sort of stale and probably going down a little bit. It's hard to sort of, you know, look at a headline that says house prices were up 0.9% in October and think, oh yeah, absolutely, it feels like that. It doesn't to me.
We've done lots of content already about building relationships with estate agents, about getting out there and viewing properties, putting offers in. And I think if you're still adamant at doing that, and you're good at doing that, and you're consistent at doing that, I think there will be people that have a reason to move that property on. And just like people have reasons to put stuff into auction and basically get what they can for property.
On future predictions, because I know everyone's always interested in what house price is going to be on a specific day at a specific time,
and we can tell you.
Street.
No, I'm joking.
Yeah, we can. Yeah. So just on that subject, so from time to time, you know, you do see some articles that do try and forecast things. So Lloyds Banking Group predicts prices will drop by 4.7% this year, as I've said, and a further 2.4% drop in 2024 before recovering. They see prices picking up in 2025, and I think by the end of 2026, 27, they were thinking that prices will be back to pretty much where you started. So a bit of a sort of a U-shape recovery. There's an article with Pantheon Macroeconomics saying UK house prices are predicted to experience a decline over the upcoming 6 months due to ongoing affordability challenges. So linking house prices very much with the not only access to but affordability of credit, mortgage lending. Nonetheless, a sharp fall in mortgage rates is anticipated in 2024, particularly in the bank rate decrease by 0.75% from Q2. That's what they're projecting. After a significant 6% peak to trough drop in house prices, there's an expectation of a rebound starting as early as Q2 2024, culminating in a 5% rise by the end of 2024. So they're a little bit more bullish with the recovery that they're seeing in house prices. They think they might actually bounce back by the end of this year. So obviously, you know, we haven't got a crystal ball, it all remains to be seen, but there seems to be a bit of a consensus there that we're in a bit of a decline. It's probably going to continue on a decline, and we'll do at least into the middle of 2024. And then there'll be a period of some stabilisation, and then there'll be some increase in house prices again.
So Neil, do you think then that maybe these figures will be or are being supported now by this hold on the interest rate? So obviously interest rate has a lot to do with sentiment. What about interest rates? And interest rates are now being held for the second time.
Yeah.
How much do you think that's having an influence on the market in terms of sentiment and straightforward sales?
Yeah, I think you're absolutely right. So decision on the 2nd of November 23 by the Bank of England committee was that they will hold base rate. Bank of England base rate was held at 5.25% and held for the second consecutive month, which I think is noteworthy because it's starting to feel like they believe that is the peak. So, I mean, okay, it might go to 5.5, of course, we don't know. But, you know, if we start to see another, a third or fourth consecutive month being held at 5.25%, then I think that will eventually translate to more confidence in the market, more positive sentiment. And ultimately, the more buyers return to the market, because they're convinced that actually they can afford that. More people might take 2-year deals. They might become more available, which are more closely linked to the Bank of England base rate. People return to the market and buy, and maybe that sort of Q2 going into Q3 2024 upturn due to more activity in the market, maybe that will come forward a little bit. Maybe we might see something in Q1, I don't know, but it's just too soon to say. Okay, well, thanks very much for watching. We hope that's been insightful and look forward to seeing you next time.